What is going on, investors? Hopefully guys are doing well out there. That is right. Big tech earnings season is over. We've wrapped it up, and basically all of these companies are now approaching and making new 52-week highs from a price perspective. We'll get into all of it this week, including NVIDIA reporting some of the largest blowout guidance and earnings revisions. We'll show that to you, as I promised earlier in the week when we were covering NVIDIA from an earnings perspective. We've got a lot of news to get to. We better kick things off like we always do with Meta Platforms. Start the week at $249. This stock up over 5.2% to finish the week at $262 per share. The company is reportedly wrapping up its spring layoffs. This is the third round of a planned kind of three-tiered layoffs. This company started with about 11,000 job cuts in the fall. They followed with another 4,000 in March and April, and it appears the latest cuts by this company more or less affecting kind of non-engineering jobs. Now, the interesting thing from an investor standpoint on this is sure, some of it gets priced into the stock this week, but we actually don't see this start hitting the tape until the next earnings season, and certainly as we get into the back half of this year, Q3, Q4, and really because typically you take these kind of one-time write-downs, or you take these restructuring charges on your financials in the subsequent quarters. It's really not until maybe Q1, Q2 of next year when you really see the benefit of these job cuts from a financial perspective. And look, that is what's driving some of the performance that you've seen with Meta. Now, the company didn't perform very well when it bought the first and largest GIF search engine called Jiffy. They paid over $310 million for this. Now, unfortunately for Meta, regulators stepped in and said for some reason the company could not acquire this asset. This was after they closed the transaction. So it was essentially a for sale, which really sucks because it's almost like getting foreclosed on. You don't really have a lot of leverage. And Shutterstock, which I didn't actually know this, is its own public company. They bought it for just $53 million in cash. Again, Meta paid well north of $300 million for it. Now, Instagram is reportedly prepping a, quote, Twitter rival app for the summer. It is currently in beta testing mode. And look, we've seen all types of copycats from Meta over the years, and some of it has worked relatively well. I think Twitter's one of those apps, and I think we're getting to that space and that time and place with social media where, yeah, like Donald Trump launched Truth Social, and there's all these Mastodon and these other competitors that start up. None of them ever, do anything. I think instead of a copycat app, you always have to do something a little bit different. That's what we saw with TikTok, and I'd like to see Instagram, or Meta in this case, invest in something that's not a copycat, because those tend to not work out. Now, TikTok, as we just mentioned, is suing Montana over its constitutionality of its statewide ban. The state of Montana here in the United States has a statewide ban on TikTok. I'm not sure if it goes into effect. Look, as you guys know, I'm not an attorney, but I did read some legal opinions on this, and it appears that Montana probably doesn't have a lot of standing to ban this app, but even if they do, Montana, while it's an absolutely gorgeous state and quite lovely to visit, and certainly if you live there as well, not a huge population center when it comes to that in the United States. Now, Meta hit with a $1.3 billion fine by the European Union over its data privacy violations. Part of me thinks this is why these regulations are drawn up, to levy these large fines into the future. And look, for Meta, this is nothing. Okay, $1.3 billion, it's not really that much. What ultimately I actually think this does is this actually stifles the upstarts, the competitors, okay? The compliance, the fines is a far bigger hurdle for the upstart, for the startup, for the companies that are not profitable or just backed by VCs. Those are the ones that I actually think that these regulations hurt way more than the companies that can just reach into their pocket and pull $1.3 billion out. Now, moving on to Apple, start of the week at 174. We are having an absence of buyers at these levels, but also an absence of sellers as well, as the stock essentially stalled out to finish the week at 175. Can India become the new China for Apple? This is a question asked by many people, including Bernstein, earlier this week, as the analyst group wonders if India could be the next profit center for the company. Now, India made up just 2.5% of iPhones sold. So obviously, in a country of this size, if you can just double that, even triple that, it's still not a large number when it comes to the number of iPhones sold, but obviously would be tangible to a business that is essentially stalled out over at Apple. Now, moving on to Amazon, start of the week at 115. Boom. This stock also got momentum, up over 4% this week to finish the week at $120 per share. Dish Network, which is its own ticker symbol as well, ticker symbol DISH, currently about a $7 stock. It jumped earlier this week 19% on reports that it's finally going to roll out its long-touted and long-awaited cell phone plan, and they're going to reportedly roll that out through Amazon and other partners as well. Now, YouTube is pushing price competition with Amazon on its channel business. This relates to what these kind of network host, if you will, when it comes to Apple TV, Roku, Amazon. YouTube has something that's called primetime channels, where maybe you can layer on a Netflix subscription, an HBO Max subscription, or now just a Max subscription, Stars, Paramount, all those types of things. Well, typically Amazon and Apple, they're taking like a 50% cut. It looks like you're starting to see those fees drive down, with YouTube or Google saying that they might only take a 40% cut. Now, speaking of rising, Netflix started the week at $369, up another 2.5% to finish the week at $378. Very interesting from a technical perspective. You want to see that when we get to that. Now, Netflix is cracking down on the password sharing here in North America. Now, it'll be interesting to see how this is executed. Obviously, you've got to weigh some kind of customer blowback that could potentially happen as well. It's also somewhat difficult because they allow you to travel with your Netflix subscription and have multiple logins. And we'll see how Netflix is able to roll this out. If they're able to roll this out and get more people to pay, obviously, that will be incremental to their business. Speaking of incremental, NVIDIA started the week at 308 and boom, up just 26% in a week to finish the week at 389. Obviously, I'm under exaggerating the fact that a company that started the week close to $700 billion valuation is now close to $1 trillion valuation. That was after reporting Q1 numbers, which were a decline on the revenue basis by about 13% year over year, but nobody cares about that, and nor should they, considering the company gave a Q2 outlook of $11 billion, plus or minus another 2%. And the expectations were for $7.11 billion. I talked about when we did the earnings videos with NVIDIA is that we are going to see a wave of revisions with the company, and that's exactly what you saw. You see here, I'll zoom this in a little bit more so you can see it a little bit better. Here's your consensus estimate for Q2, basically nailing what the company said. And really, okay, what I was interested in is kind of looking out a couple of quarters. And obviously Wall Street and most investors got this wrong. And so we kind of have to use these numbers as essentially a guide, but we're looking for $11 to $12 billion worth of revenue, which now, okay, the growth rate, because people were talking about, and well-deserved, people are talking about the valuation for NVIDIA going forward. Look, okay, if you're going to grow your revenues 100% for the next couple of quarters, you're going to have a premium valuation. Now, where things get a little bit tricky for me is you start to look into next calendar year, 2024. Are we going to slip down to a mid-teens growth level? Means NVIDIA is probably priced to perfection close to the current time. We'll certainly look at this from a technical perspective. It's kind of setting up that way as well. But, look, Wall Street was wrong already. Maybe they're wrong again. And instead of a mid-teens grower next year, we turn this into like a mid-double digit, mid-20, 30%. Well, the stock is actually probably undervalued if that's the case. Depending on which side you fall on here, this stock actually could still be a buy. Now, the interesting thing when you talk about these earnings revisions is we've actually just gotten back to the point where we were last year. So Wall Street was actually anticipating $11 to $12 billion worth of revenue, basically where the company is now. Those estimates came way in, and that caused the massive drop in the stock and kind of a re-rating of it. And now we're just simply kind of back there and back to the expectations. And I actually think it makes sense that the stock is essentially back to where it was given this type of move in the earnings estimates. There's going to be some people out there that are saying, oh, I don't trust Wall Street estimates. I don't know why you look at them. This is relatively rare, okay? This would be like your shoelace breaking on your shoe and being like, I'm never wearing shoelaces ever again. They're so unreliable. This is just one of the rare cases where Wall Street just simply didn't get it right from an estimate perspective. Now, moving on to Alphabet. Started the week at 125. I think the one stock of this group actually down. So we're seeing an absence of buyers materialize at the 124 level for Google. Now, DirecTV seals a deal to maintain the commercial Sunday ticket rights. The Sunday ticket is the exclusive out-of-market NFL game package that you are now going to be able to get through YouTube TV, and I've been getting a lot of solicitation for that package. Now, you are still going to show up at your bar and your restaurant and other commercial locations and access that through DirecTV. Now, Google and the European Union are going to develop an AI governing pack ahead of regulation, and we'll talk about this when we get to Microsoft as well, and really all these mega cap tech stocks. Why are all the mega cap, you're seeing all the CEOs and all the mega caps, they're saying we need to be regulated. You need to pass regulation. Why are the mega caps doing that? Because they know, and this goes to back what we said in the Meta where they paid a $1.3 billion fine. Okay, more regulation is actually good for the mega cap stocks. It's good for the incumbents, okay? More regulation in the banking sector. What did we see after the great financial crisis in 2008? You saw heavy regulation on the banks from a capital requirement perspective. And what has happened to the banking sector? It is consolidated. What has happened to all your regional banks over the past 10 years, 11 years? Most of them are gone. And so whenever you see these large companies, the large incumbents, pushing for regulation, it's not because they're trying to be nice. It's because they know that more regulation, more burdensome. They already have an army of attorneys. They already have corporate lawyers. They already have compliance officers that they pay hundreds of thousands of dollars to. The upstart tech company that could eventually maybe eat at some of their market share, they don't have all that. It is very expensive and very complicated to abide by these regulations. That's why Google literally gets in bed with the regulators to write the regulation. It's not to protect you. It's not to protect anybody but themselves. The White House is looking to develop a national AI strategy. If, anything that happens in Washington, and this is not a criticism of the current administration, but look, there's nothing that they're going to be able to do there. Now, Google is infusing its ad business with new AI tools. Look, if you've been buying ads on Google, which I've been doing for nearly 15 years now, they've actually had a lot of machine learning and a lot of, quote, AI in the background for a long period of time. What I've noticed, again, this is just purely anecdotally, is my ad impressions, my click-throughs are way down on Bing in particular, and now Google as these chatbots start to roll out. We'll see if there's a reversal there anytime soon. Moving on to Microsoft. Start of the week at 320. Boom, this stock caught a lot of momentum, up nearly 4% to finish the week, very close to $333 per share. Microsoft Developer Conference seen a positive for database companies MongoDB and Elastic. Both have their own ticker symbols. And this is certainly an area that I'll talk about probably a little bit here on the channel, but my new position with a new research firm, this is an area we'll definitely dive into even more. Now, Microsoft's President Smith lays out a plan to govern AI amid calls for caution. Again, all the calls for caution around AI are coming from the mega cap companies because they don't want startups to have a clear path at what they see as a multi-billion, maybe trillion-dollar opportunity for them. Now, Microsoft says Chinese state-sponsored hackers attacked, quote, critical infrastructure, this including military, transportation, construction, government, information technology. Pretty much every system got hacked by Chinese hackers. That's probably not a good thing. Now, Microsoft appeals the UK decision to block that Activision acquisition. Now, we obviously have the EU saying they are going to approve this, and the UK saying that they aren't. It looks like to me that the Activision price, while it's not quite as high as it was before the EU announcement, the market is pricing this in still probably to get done. So we'll see, obviously, what happens there. Now, Microsoft dipped earlier in the week, as Bernstein says, Copilot AI is going to be, quote, everywhere. And while I haven't experienced this myself, I do have a 365 subscription, and it's something that a product that I use and I'm going to be using a lot more. I saw the presentation from Microsoft, and this Microsoft Copilot AI looks fantastic. Google is going to be rolling out similar type of tools, and I just think the use cases there are going to be fantastic. Moving on to Tesla, and this stock moving on too. Started the week at 182, up over 5.7% to finish the week at 193. Very interesting level from a technical perspective. We'll get to that in a moment. Ford Motor Company works out electric vehicle charging partnership with Tesla. I actually listened to the Twitter space where you had the Ford CEO actually get on there with Elon Musk. And the best way I could describe it, it was an absolute bromance. These guys really get along. Elon Musk even offering up licensing and maybe open sourcing some of Tesla's software to be used inside of Ford vehicles. Ford stock soaring over 7% on the news. And one of the reasons why this is interesting for Tesla is that charging business, it appears, like, in my opinion, and look, I wrote this article about EVgo. I wrote an article about Blink Charging. When I wrote this article about EVgo back in March, the stock was 41% higher, and I had a strong sell on the stock. And my thesis was there was going to be one winner when it comes to EV charging. I just don't see this playing out like the gasoline business. Maybe over a longer period of time it does, but that certainly didn't make EVgo a compelling investment. The clear winner in the short term and likely the longer term is actually going to be Tesla. And the one thing that we know about this energy business is it's going to be profitable. Elon Musk saying back in 2022, they aim for 30% gross margins on the charging business. In other words, maybe about 10% kind of net profits for every dollar that you spend at a supercharger. They're looking for about 10 cents of profit. Now, obviously, a small part of Tesla's business right now, but if vehicle makers like Ford are essentially forced to use the network of superchargers built out by Tesla, well, obviously a much larger business. And anybody that has an EV and then is taking it on a road trip understands the importance of a supercharger network. While you can certainly own an EV and charge it at home, if you drive any length of mileage, the supercharger network is obviously critical. Now, Tesla sends Shanghai China-made electric vehicles to Canada for sale for the first time. That's great for the people up in Canada. Now, moving over to the technical segment of the show, some technicians said the close today at 42.05 was critical because it essentially put us at a new high when it comes to the upper channel that we've been in. And I would tend to agree with that. You're still making a series of higher lows. You're still making a series of higher highs. Not wildly convincing at the current time, but it looks like the momentum is still going to go higher. Even if you were to have some type of pullback in the coming weeks and months ahead, there should be levels of support down here where buyers could potentially step in. If you look at the inflows into money market accounts, if you look at the amount of dollars that are still sitting on the sidelines, some of that is probably contributing to some of the FOMO that we've seen with these tech stocks because, like I said, most of them are hitting 52-week highs. Now, when it comes to Meta, it is playing out picture perfectly from a technical perspective. We talked about forever, basically, that once it got over this purple line, which on the dot was 245, I think I was calling out a number closer to 250. Once you got over that, and that's what we've seen, there was a gap there from about 245, 250 up to about $293, call it even $300, and you were going to close that gap. And I was going to get in there right behind you and do this trade and make money. And I would be in this trade and I would be making money if I didn't have a job starting in about a week and a half where compliance says I can't own stocks that I would likely recommend. And Meta, while maybe I don't recommend it once it gets to these $300 levels, this gap closing is a little bittersweet for me, as I would be riding this wave. I think this gap has a high probability of closing. And if you've been tuning into the channel, you should be well aware of that technical setup. Now, we talked about Apple. It's stalled out up here, and we have an absence of buyers. We have an absence of sellers. This certainly would be a natural position where this stock would find a breather and potentially break down. If you break higher on this level, it should actually be probably a significant move higher. If you're like me and you have compliance telling you that you need to sell all of your tech stocks, this is when you sell, and that's what I did this week with Apple. Now, moving on to Amazon. This one's got a little bit more airspace, similar to Meta. There's not a gap here, but the first area of kind of hard resistance is probably up here at about 136, a little bit higher at 144. Stock's sitting at 120. Momentum stays in these markets. Yeah, this stock is probably going to get up into this 130, 140 area. Moving on to Netflix. This one looking absolutely gorgeous as it made essentially a new higher high here. Not like super convincing, but here we are. There's a level of resistance up here that we just have not been able to get through with Netflix at 390. Very similar to Meta. There is a gap up here. It's not as wide as Meta, but you've got a gap between 450 up to, $500 here. The stock, these tend to be magnets. I mean, the closer you get, it's like a magnet sticking together. It's like slow, and then it like snaps. That's kind of how these gaps tend to be from a technical perspective. Doesn't always play out perfectly, but you see we made a large gap here, and yeah, you closed that in pretty short order. I could see, again, assuming the momentum stays in these markets, more FOMO money continues to flow into these markets, that gap will close. Now, moving on to NVIDIA. Here's what I wanted to show you with NVIDIA. I think this is an important view. I've got this on a log scale, and this dates back to, about 2018. We're in this channel with NVIDIA. It's a wide channel. It's darn near 100% top to bottom on the channel, but look, the stock's got a high beta. It's difficult to rely on Wall Street analysts at the current time, but with NVIDIA, and look, some of you are looking at this, maybe you want to take profits on NVIDIA. Probably even more of you are like, well, maybe you missed the boat on NVIDIA. Now you want to jump into this one. Well, okay, so from a technical perspective, it looks like we should reach some level of technical resistance as we approach really, there's a lot of momentum that could still remain in this stock. It's sitting at 390. This one could get kind of comfortably into the 450 range and basically be back to the top of the channel. Then you're looking for subsequent pullbacks on the way back. The beautiful scenario is if you come back somehow and back test this line, again, depending on how fast and steep that move is, will depend on where you fall on this line. Anywhere south of 300 over the next, call it 6 months, probably could be bought. Now, moving over to Google, this one met an area of resistance. You see here this level where the stock is stalled out this week. And again, the stock basically stalled out. Right here, we'll just call it $125. It was support for a while after the stock made all-time highs. You push through this 125 level, and you're probably retesting all-time highs with Google up close to $150 per share. Moving on to Microsoft, very similar to Google, but it broke through a couple of areas that I would say were support resistance. In fact, we had this area here at 320, just kind of blasted up through here. Once you do that, the all-time highs are there, and now it's a question. Do you pull in an NVIDIA and just continue to blow through that area, or do you create a topping pattern here, do a pullback? Me personally, I wouldn't add any new money to a stock that was making this type of formation unless it was a shorter-term momentum trade, because the pullbacks will show up. It's not a matter of if, it's a matter of when those pullbacks show up. And with this sharp of a move, you actually probably will get a relatively sharp pullback as well. And those you want to plan ahead of time, because on those sharp pullbacks, the news flow is going to be ugly. Now, the last stock that I will look at is Tesla. I'm going to turn off the log, just makes the chart look a little bit prettier. And I've been asked, did Tesla break out this week? And it really depends on where you draw this kind of top of the channel line. I could see in some cases we probably did break out with Tesla, but what I am noticing is we are still making lower highs here, lower lows. So I'm not here to call yet that Tesla has kind of broken out, but it's very close. You get momentum in Tesla. I really think with Tesla, you actually want to see it break up over probably like 220 to really confirm that maybe the sellers are kind of done. And even if you break over 220, typically what is followed is some kind of back test to the top of the channel line, and then you get kind of your resumption higher. That's what we're looking for, at least to the upside with Tesla. I think if I were to have to put on a trade right now with Tesla, I would actually play the short side with this one. Not that I'd want to step in and short a stock like this. But again, if I had to pick one direction or another, I don't like to talk out on both sides of my mouth and say the stock's going to go up or down. Anybody can tell you that. I would say I would actually lean that we get rejected at this area. Not necessarily make new lows, but that would actually make sense from a technical perspective. This is a downward channel. This stock is still in this downward channel. And anything that we've learned in the stock market is that you are in this downward channel until you're not. And then once you're not in the downward channel, yeah, you can rally, as the case with NVIDIA, Google, Microsoft, Meta, Apple, Amazon, Netflix. They've all rallied out of that downward channel. Tesla's still in it. And so certainly if the rest of this group continues to push higher, Tesla's probably going to push higher as well. I just think the gas is going to run out, but obviously that's what makes it a market, and that's what makes coming back next week for next week's show very exciting. Hopefully you guys have a wonderful week out there. Got some exciting news and exciting changes actually coming to this channel. I'll be very excited to bring that news to you in the coming weeks and months ahead. I hope you all have a wonderful weekend. I hope it's a safe weekend and a fun weekend, and we'll see you again next Friday. Good luck with your investments.